Hey everybody, Chuck Barone here, Friday, November the 18th, 2022. Let's wrap this week up. It's been a crazy week, and it looks like the crazy's not going away. As always, we want to thank everybody and welcome you to the show for the day. Actually, there wasn't a lot happening today. Just got a little bit of commentary. In the markets today, not a lot happening. Stocks up small, kind of a choppy day, up and down all day. There's just a lot of uncertainty in the market right now. The market's really rallied on this good news on inflation. Now the Fed talking heads are out there. They parade of yo-yos, I call them. Talking down, pausing, talking down, less rate increases. And I think that's got the market a little bit spooked. I've been telling you guys, this is not the last time we had inflation at this level. It took 10 years to get rid of it. I seriously doubt we're going to get rid of this inflation in like just a few months here, like we're trying to do. The rate hikes that we've dealt with are just the beginning. There's going to be more, and we have to feel pain to make this go away. As loose as the situation was to drive this inflation, now it has to get the opposite, tight, to drive the inflation away. And it's just, there's no getting around it, regardless of how these markets want to react on a day-to-day basis. So markets up small today. Bond market, prices down, rates up. The 10-year sitting at 3.82%, up just 4 basis points today. Not a very big move. The 2-year bouncing up 7 basis points to 4.53%. That's a gigantic yield spread now. We got 60 basis point difference between the 10-year and the 2-year. That's a big gap, especially because it's inverted, right? Nutsoville. Dollar up today, 106.92 on the index. I mean, the dollar isn't as strong as it was earlier in the year. I think it peaked out a little over 114 on the index. 106 is still very strong. The dollar has, for some reason, kind of gone backwards a little bit. I guess it really was a little too high and was causing some craziness in the import-export world. So the dollar coming back down to earth a little bit, but up today. Metals today down. Gold down $11.40 at $1,749 per ounce. Silver down 6 cents to $20.88 per ounce. Metals are holding their own. I mean, they're actually, I think that if metals get the right information, I think we could see a pretty big rally in metals. I'm kind of liking them right now. I think silver has a little bit of ways to go for the upside. Gold too. So we'll see how and when it happens. Oil today down $80.24, down $1.38, right in that trough, right in the pocket where it's been comfortable between 80 and 85. My guess is it's creeping down close to $80. We'll probably get a little bit of a bounce next week. Natural gas today having a calm day, only down a little over 1/4%. $6.35 for the million BTUs. Those two, very difficult to trade right now, guys. Be cautious if you're in oil and gas. Bitcoin today down small, about $50, 16,636. I think Bitcoin, the party's just about over for Bitcoin on this. I think that if the government gets in and really puts all kind of regulations on cryptos, which it looks like they're going to have to do, this unregulated market obviously did not work out very well. Well, I don't know how appealing they're going to be with the government's fingerprints all over them. Maybe this solves the whole idea of the government digital money. Let's just take over Bitcoin, right? Anyway, so I think I really never was a big fan of cryptos. I got to admit, though, I don't know a lot about it. I just prefer my investments to be backed by something, earnings, full faith and taxing power of the United States government, real assets. I didn't understand crypto enough to understand its backing, what was supporting the values. I still think it's kind of a speculative play. So be very, very cautious if you're in that, okay, guys? In news you guys need to wrap this week up, not a lot today, guys. Housing still cratering. New home construction cratering. More houses on the market. Prices coming down. Here in Vegas, I think Jordan was telling me we're in the 420s now, which is a pretty big move, more than around 55,000 from the peak here in Vegas. And it's just getting started because people still cannot afford these prices. They cannot afford the payment at these prices. So unless we want to lock out first-time buyers, and we want to have the real estate market be basically controlled by big corporations, private equity groups, hedge funds, and all that money, and not be really the key to the American dream like it's been for the last forever 100 years. We need to see some action happen in housing. We need the prices to come down a little bit. Now, what's happened though is it's kind of really weird because we're getting into this damned if you do, damned if you don't situation, because inventory is not as tight as it once was, but it's still pretty tight. And the problem we're going to have in real estate is new housing permits are down well over 50%. So they're not building a lot of new housing. And the existing housing, there's just none on the market because who wants to give up their 3% mortgage to buy another house at a 7% mortgage? Even if you're downsizing, and you're downsizing dramatically, your payments are going to be higher on the downsize, which is not exactly what people do. So right now the inventory is very, very difficult, and you're going to see more and more people reluctant to sell their houses because there's just no way that it makes sense to sell your big house with your regular payment you're comfortable with to get a smaller house with a bigger payment. No one's doing that. And if you're moving up to a bigger house, well, you might be a little reluctant to do that, again, with the payments. I mean, the difference between a 3% mortgage and a 7% mortgage is night and day. And people are going to be very reluctant to give those up. So I got to see how they're going to correct this inventory. I think if prices really start cratering, you'll force out some of the scared investors, the people who own one house or two houses, and who get very shaky. They might list and blow out, but it's going to be interesting to see how housing inventory progresses heading into next year. The options markets, have you guys seen this? I was reading this article today. They said the options now are the busiest they've been. Today was options expiration date. $2 trillion in contracts expiring today. Wow, this is massive, massive volume in options. They said people are really speculating on the really short-term options, 1 month or less, even 1 day they're betting. Guys, this is not investing. This is called speculating, and this is not what we do, okay? So if you're in options and you're playing options, you're not just doing simple covered calls, be very, very careful, guys. This is interesting here. Wall Street bankers are expected to take a pretty big haircut this year. Wall Street not having a very good year, especially if you're writing debt stuff. I'm sure M&A is down. We haven't seen the IPOs coming like they were. So Wall Street bonuses are expected to drop by 45% this year. Wow. Those poor Wall Street guys, they're going to have to live with 2 million instead of 4 million or whatever the numbers are. It's funny because when you make the kind of money that they make, even a 45% drop in your income is a hundreds and hundreds of percent increase in income compared to working people. So it's hard to have a lot of sympathy for these Wall Street guys, even though, ouch, that's going to be a pretty big haircut. Also news today, consumer debt continuing to fly like crazy at the same time as interest rates on consumer debt are flying like crazy. So we've been saying this since we started this show. Please, please, guys, be very careful adding on new debt. Borrowing money is easy. Paying it back isn't. With the rates now, these payments are not going to be as comfortable as they were when they were giving money away. So if you have to add debt on, that's one thing. But if you're doing something elective, please be very, very cautious. Consider the payment. Consider the fact that you'll probably be able to buy that item cheaper in not a long period of time, and you're probably going to get a better rate down the road, because these high rates, I'm guessing, are not going to last forever, but it may be a little bit of time with the rates up higher. And finally, I was reading today, retailers are concerned. You know, the Christmas season's coming up. Hell, next Thursday is Thanksgiving already, man. It seems like November was basically a week long, it feels like. But they're moving into their busiest time of year for retail. They're worried that, you know, people are going to spend less on Christmas this year. Truthfully, I think people probably won't spend less. They'll buy basically the same amount of stuff that they have been buying for Christmas, but they'll just spend more on it because prices are up. So I think that they're worried about their inventories. They're worried about how to keep their stores and keep everything stocked and how much should they have. And it's very, very difficult this year to try to get a feel for where the public is moving forward on spending money. I mean, right now they are, but that could change instantly. And if you're a retailer, you don't want to get caught with a tremendous amount of excess inventory heading into the new year. Just the craziest times. You know, I've been watching these markets, been in finance for a long time, guys, a really long time. Watching these markets, I got to say, it's not something I've seen. I don't even remember in 2008 being as crazy as this. I don't remember 87 being as crazy as this. I don't remember the dot-com bubble being as crazy as this. It's really interesting how these are times, we're living history, guys. This is, you know, the big change is here. Now we've had the election. We're going to end up with divided government. Hopefully that will put the reins on the government spending a little bit, which will not be bad for our inflation. As I've said in the show before a lot of times too, you know, the Fed controls the monetary policy and they're doing what they can do to bring this inflation down. The other side of the coin is fiscal policy. Those are our geniuses in Washington who still want to spend money, like the United States is a rich country. They want to spend money they don't have, give billions and billions of dollars away, crazy stimulus, all kind of nutso stuff. Hopefully, that's going to end now. I just hope the Republican Congress doesn't get us into a situation where it's nothing but investigations and hyper partisanship. You know, I guess the Democrats did it, so now the Republicans have to, you know, the Republicans did it, the Democrats returned the favor, now their turn to return the favor. It would be nice if these knuckleheads would decide to get back to governing someday and just stop the friggin' showboating, but that's something that we're probably going to have to wait a little longer for. Anyway, guys, that's it for the week. I'll be back on Monday. We'll be rocking and rolling next week. Again, I apologize for missing days earlier this week, but it feels good to be back. My beloved Bills will be playing in Detroit this week. I'm sure a lot of you guys have seen the news. Buffalo's getting the massive blizzard of blizzards. They're expecting somewhere between 4 and 6 feet of snow in Buffalo this weekend. My mom still lives there. She's sending me pictures. You can't even believe how much snow they've already gotten. So the Bills going to Detroit to play a home game in Detroit. Fabulous. I might as well stay there if the snow's real bad, because just a few days later on Thanksgiving, they're going to be playing in Detroit again against the Lions. Go Bills. Go fans. Go people. Have a great weekend. Spend some time with the people you love about, your family, your friends. Enjoy this weekend. The crazy's over for the week. Let's see what new crazy we get starting on Monday. Until we talk then, guys, have a great weekend. Take care. Thanks.